Hey guys, welcome back to the Results Junkies podcast. A new year, but a recurring theme for Mr. Singh, who is a little bit under the weather after a flu diagnosis. So I preemptively apologize for him in advance for any coughing and hacking. We've got 3 stories on the docket today. Hopefully we'll get through all 3. If we don't, I definitely think that these are the sorts of stories we would talk about next week. So we've got an article about Turo, which is a car sharing platform. I think that's a bad way to describe it, but a car rental platform peer-to-peer. That was involved in the 2 recent tragedies. And I think there's some interesting thing about startups there that Paul and I want to get into. There's some information about a new fund that was just raised in the venture debt world that I think might give us some ideas of what the future looks like for startups and founders. And then an article about how AI is, for lack of a better term, being crammed down the throats of users far and wide. Mr. Singh, I won't ask how you are because I know how you are. But good to see you, and good to be back on the train,
Happy
on
New
the
Year.
podcast train.
Happy New Year. We survived Disney. Luckily, I mean, I know you were giving me a hard time for going around the holidays, but we went from like the 21st or something like that to the 26th. And it turns out I guess that week is just not that bad. The week after, like as we were leaving, is when it got real nasty. So that was good. But somewhere along the way, we got exposed to flu. And, all 6 of us got vaccinated at the same time back in October. And for whatever reason, 3 of us tested positive for flu B and the other 3 are just chilling like normal. So it's been a tough week at the Singh household. It is a petri dish here, so I will not invite you over.
Yeah, I think I'm going to scrap on the being invited over anytime soon until I know that the petri dish has been fully cured. Let's put it that way. So let's jump into Turo. Real quick housekeeping first. A show at resultsjunkies.com. He's at Paul Singh on all those social media channels. I am at Pizza in Motion. So Turo, for folks that don't know, they build themselves as a car sharing app. Essentially, this is peer-to-peer car rentals. So there's a little bit of a salacious piece to this story in that both of the recent tragedies in New Orleans and in Las Vegas, where there were cars that were used for mayhem, if you will, were both rented via the Turo app. And while that brings to light Turo overall, I think less focus on those specific incidents and more just on this concept that you and I talked about in pre-show. At a high level, what Turo does is push the liability threshold onto the hosts that own these cars. And clearly they don't insure themselves. They may have third-party insurers that help hosts and all that stuff. But one of the things that we see in the startup world from time to time, and I think Turo is a great example of that, is they're able to grow rapidly because they don't have some of those traditional encumbrances that say like a Hertz or an Avis has, where they have to protect their fleet. And if they invest in a car and that car is out of the fleet for a certain number of days for repair, then that doesn't pencil for their ROI. Yeah. And I think a lot of what has helped Turo grow is this ability to sidestep some of that and put that liability onto its customers.
Yeah, and before I even say anything, I'll just kind of point out, I think it's kind of, and I'm sort of chuckling at myself because, if you asked me 5 or even 10 years ago how much I cared about risk and liability, I'd kind of be like, come on, man, it could go away. But I maybe it's me getting a little bit older, maybe a little tiny bit smarter. I don't know. I find myself thinking more and more about it. And so, yeah, I mean, look, full disclosure, last time I used Turo, I've actually used it a couple times as a consumer. This was a couple years ago when I was traveling for business. And this was around I think it was like kind of during COVID times when like Hertz and all these companies were really sold out.
Yeah.
And I was like, okay, let me try Turo. And I remember, and I think we're going to talk about how it's changed now, but back then you would request a book, and then I guess presumably the person that owns the car would choose to rent to you. And then somewhere in there, at least the people I was dealing with would say, hey, I need a picture of your face with your driver's license right next to it just to verify that it is you. Okay, well, at the time I remember thinking that's a little weird, who's this going to and all that, but I did it. But you point out this article in this topic, and I think it's really interesting. Before I go any further, I think it's probably worth you flagging that paragraph that how they changed in 2024, because I think that's a really interesting change to talk about.
Yeah,
so why don't you set that up and let's go there.
Yeah, one of the things that they note in the article, and I have some opinions on this, but we'll frame it up and see where your head is. Says the company said that in 2024, all of its reservations would book instantly, meaning a host can't screen customers before deciding whether to accept their reservations. Turo said host screenings can be discriminatory, meaning, somebody who looks at a driver's license for someone may not rent to them because of their age, their color of their skin, their sexual orientation, any of that sort of stuff. So that's the change. Curious to hear your thoughts on that before I share mine.
Well, it's interesting. Their PR people are great, right? Because they say it's all about stopping or preventing discrimination and all that stuff. But
yeah,
on the flip side, I don't know, it almost seems like on the flip side, it almost seems like whoever's in charge of the metrics for bookings was kind of like, all right, hey, we are going to streamline bookings because I got to juice this number a little bit. I've never actually rented my own car to somebody else,
right?
But if I were, this would make me less likely to want to do that. I mean, I don't even know. Like, do they check driving record? I don't know why I'm picking my words. I can understand why you would not want to rent to, or why you'd want to prevent discrimination. Totally get that. Full stop. At the same time, when I go rent at Hertz, they do have a special set of rules for people under 25. I think I'm afraid to say this because I'm going to jinx myself. Knock on wood, I haven't had a speeding ticket in 15 years. I will probably have one tomorrow now.
Yeah, there you go.
But I remember years and years ago when I was within 3 years of a speeding ticket. I remember having rented a Hertz at the time, and they flagged it. They're like, "Oh, you got it was like a 19 over or something like that in a 55 or something like that which is, as you know, here on I-95, not hard to do."
Yeah.
Anyway, the point is though, is that this whole shift of liability now is really interesting. I don't know if it's too soon to talk about the news and all that, but I wonder if any sort of liability shifts in any way whatsoever back to the owners of the vehicle. But anyway, I could go all over the place on this, but
no, I think
the shift of the liability, I think, is what you're pointing out that I think is interesting.
Yeah, and this little snippet doesn't talk about, how much of that liability is shifted or in what fashion it's shifted and how these automatic checks, may or may not shift some of the liability back to Turo. I think, when you and I think about startups, obviously growth is a huge part of the startup world. And in many cases, though not all, it's growth by any means necessary. And I'd be lying if I didn't look at this little snippet and say, by making bookings instant, they are leaning into growth at a time that they are trying to take the company public. And I am sure that an instant booking is better for consumers to know that they have a car in an instant. I'm not sure it's better for hosts, and I'm not sure what that liability burden looks like overall. So color me jaded when I say this smells like a growth move, not a move focused on the consumer or the host.
I would agree with that. Yeah, that's probably some important context we probably should have shared at the beginning. But yeah, they're on the road show right now, I think. So
yep.
Yeah, well, I think it's one of those things where it's as we get more and more, and I'm probably dating myself. I feel so weird talking like an old guy, but do you remember when Airbnb and all of these, this whole class of startups came out? They were trying to coin, this whole industry didn't really have a name, but they were starting to coin terms for this. And I forget now all the different terms for it. But this cloud-based rentals company, whatever the industry terms were, they were trying to come up with all these terms back then. All of it back then was really about monetizing your unused assets or monetizing,
right.
It was just, right. it was portrayed something entirely different.
The sharing economy.
The sharing economy. That's the word I was looking for. Yeah. And so then now here we are 10 years later, it's matured enough to where we're thinking about who's actually liable for these things, and I think in this particular case, again, I don't know if it's too soon to talk about it, but I think I saw in the news so far that at least for the New Orleans mayhem, as you called it, the vehicle was rented from Turo, and where he was staying was an Airbnb.
Yeah.
And it'll be interesting to see it'll be interesting to see what happens with the liability of this. Do do people that got hurt just cast a wide net with anybody even remotely involved in any of those rentals? And what does that mean for like even more liability protection, indemnifications, and all that stuff? So I don't know. It'll be a wild thing to see over the next couple quarters. But
yeah, and if we think about the sharing economy, I think to put a pin in this, I think, if you look at either end of call it the barbell that was the sharing economy for the longest time, with Uber and Airbnb and all of their relative competitors in those spaces, those are two other examples of really big businesses that grew in part by moving the liability elsewhere. Uber putting that liability on the drivers of the cars to maintain their own insurance and, to maintain lost revenue when their car was in an accident and they couldn't drive. And then Airbnb, same thing. Somebody wrecks your house. Airbnb host is not turning to Airbnb for compensation. They're going to the consumer. So I think there are examples in the startup world of where not just the liability shield was moved, and that was what helped growth, but by being able to move the liability calculation elsewhere, it helped these companies grow much quicker. And I think that's one of those things that you'll see that we see as these companies go public and they wrestle with as they get bigger, how these issues come to pass. Uber's obviously dealing with driver characterization. Are they employees? Are they not? All that sort of stuff. Airbnb is dealing with safety and security issues. And now we've got the same thing with Turo. So I think it's an interesting matrix.
It's a brave new world.
It is. And as I get older, it's amazing how quickly I can forget something. Because in pre-show, I said I had something I wanted to share with you. We started the show, and then I instantly forgot to share it at the start. So a brief stop here to note two things. First off, I love second-time founders. And I sent you this tweet last week. It was very topical. And I'll see if Jeremiah can put it up on the screen. But it says, first-time founder, you need to sign NDA before I tell you my idea. And then the second-time founder says, here's everything I've got. No one's going to care until I make it happen anyways, and it'll take money, years, and probably won't work the way we expect. And this is really topical right now, and I wish we were recording a little bit later this week and I could say a little bit more. But one of my favorite portfolio companies, and maybe my favorite portfolio CEO of all time, has decided to get back into the game, had an exit already, and gave me a call last week. They're getting back in the travel space, which is, trying to invest in 10 travel startups a year for 5 years, running behind on it. And it looks like sometime next week, probably when this episode drops, we will have written our first check into this second endeavor. And all I can say at this point is I loved their idea when they pivoted into it the first time as one of the founders in our portfolio. And quite frankly, I won't say the only reason, but I think one of the major reasons they didn't have a, sort of a massive breakout and only had what I would categorize as a very good exit was because of COVID and some significant restraints it put on the business. So I'm really excited to see what a second-time founder who's had all the dents and warts and all that stuff can do in an environment where they're not constrained by an outlier event like COVID.
Thanks for the hot tip. Come on, man. Although I will say you had me nervous. I was waiting for some meme or awkward photo of me to be posted on the screen.
Yeah,
maybe that comes later.
Yeah, no, it doesn't yet. But I do have to check Instagram. As you all know, we have our fair share of that from dedicated listeners. So
that's right.
So
that's awesome.
Let's dig into. I hope I can talk a little bit more about that next week, and maybe we'll have some Alex memes to go with next week. All right, so next up is an article about what would probably not have been a big deal story a few years ago, but I think is a bigger deal now. And the genesis of this is a company called Turo Capital in Texas is raising a fund that's over $250 million, and that in itself isn't necessarily unique. But what's unique here is that this is all going to be venture debt, and I think you and I have talked about how it feels like there's a bit of a log jam in the later rounds for founders to continue to get capital to move into the public markets or to SPAC or to have a big acquisition. And, it just struck me when I read this about, well, gosh, I mean, if a significant chunk of money is going into venture debt, I would imagine to some degree that probably reinforces this hurdle mentality or this logjam mentality at the later rounds.
Yeah, right. Because you gotta. Well, for people that don't know, let's maybe set this up for venture debt. Do you want to just talk about that real quick?
Sure. Yeah. So it's real straightforward. If you invest in a company, and you get traditional equity, they don't have to pay that money back. Venture debt is not only like the credit card that you have at home, but I mean, typically with a much bigger hammer, where the larger the amount of debt you have, the more that they can do. With your credit card, it's personal liability. They're not taking your house, stuff like that. With venture debt, I mean, at some point they can seize assets, they can seize revenue streams, receivables, all that sort of stuff.
Right, because you're not giving them the equity for that money, you're putting
Correct.
something else as collateral, and that's typically the shares of the business, maybe the revenue streams, just depends on what your deal is. So with that context in mind for everybody, I mean, look, first of all, venture debt is not something that applies to particularly early stage companies. So this doesn't mean that there's another $250 million available for early stage companies. That's a different asset class or part of the asset class. This is money really for usually later stage companies, and typically companies that have different sorts of cash needs. Like maybe they're doing manufacturing, maybe they're, carrying lines of credit for their customers.
Yeah.
There might be things like that. So kind of unique, but at the same time, like not surprising. Now, with all that said, to the point I think you were trying to make there at the beginning of this. Yeah, I mean, look, it does also help private companies stay private longer. It also comes with the risk that some of the companies that do accept this kind of money and need this kind of money at the later stage, they may not be able to go public because they can't pay back,
right?
Whatever the amount of money is that they're borrowing. So definitely kind of pushes that liquidity window out further. But if I had to bet, that's probably what one of the justifications was to the LPs to raise this fund, is that, we're recording this at the very beginning of 2025, and I would say by and large, the IPO window is still not open.
Yeah, right.
Right.
It's still very slow, yeah.
Yeah, so this was probably, when they went out to the LPs, part of the pitch probably was like, hey, look, we're going to get our hooks into pre-IPO companies 2 to 3 years before they might actually go public. And that's, depending on what your asset allocation looks like, that can be a pretty compelling position to take as an LP. In this particular case, the signal is pretty good. I mean, Peter Thiel looks like.
Yeah.
Yeah, it looks like Peter Thiel, I guess, is supposedly one of the 28 investors in this fund. That's a pretty good signal.
It is, and for what it's worth, I think, like, just to be clear for folks, because we've talked about venture debt before on the show, though not a ton. Venture debt is a common vehicle used in this ecosystem. I think it's most effectively used for companies that produce physical goods, where you're leveraging debt against inventory. Maybe you're building something in Shenzhen and it takes a while on the ocean, and then you've got sell-through risk at a retailer, or larger purchase orders coming into the holiday season, that sort of stuff. Like the debt model makes a lot of sense for things like that. And you and I know, we won't mention the company, but there's one of our portfolio companies that is actually having this conversation about a potential debt facility to help with some inventory management. So there are instances where debt can be the right way to grow. It comes with its own sets of constraints, and my guess would be, with the size of this vehicle, that there will likely be more venture debt that's structured against SaaS and recurring subscription revenue, where the receivable is the key as opposed to the inventory. And that just, that represents a sort of a little bit of a subtle change in my view.
Yeah. Well, I think the interesting bit here, though, is that, limited partners are still looking for places to park their money, and parking it in a fund like this is probably a interesting sign. There's definitely there's clearly enough appetite out there for somebody to close a $250 million fund. Sorry, $250 million fund.
$250 million fund, yeah.
In 2024, 2025. So that's pretty interesting.
Yeah,
we're still a long ways away from where we were. What was it like? I feel like 2018, 2019, 2020 was like everybody with a pulse was raising a fund. And now I feel like I can probably count on one hand every quarter, who actually closes the fund.
Yeah.
Good for them. You didn't ask this, but I'm going to just say it as well. Every time I see a new fund get raised, I just remind myself how glad I am to not be on that side.
Not be
of the
that
table
guy.
anymore.
Yeah.
Oh
yeah.
Man.
Yeah, I get it.
Oh.
I get it.
I'm stressed still these days, but it's a different stress.
Yeah. Well, it's the 17 kids probably.
Yeah, that has something to do with it.
That's probably something to do with it. So last topic up is sort of, I would say, I won't call it a surprise because it's not. It's just one of those evolution of the model sorts of things. We haven't seen this come to the US yet, but again, all these articles will be in the show notes. Here what we've got is a story about a change in Microsoft's pricing strategy as it relates to AI. And we've talked a bunch on the show about just how much, money has been committed to AI in general through NVIDIA purchases and bandwidth and, data centers and just all of this infrastructure without a whole lot of return yet. Valuations sky high on some of these companies on what's to come. And we've seen, monthly subscriptions of these different AI products. I think you said you use one of them. Are you using ChatGPT or Claude or?
I'm actually just using the free version of ChatGPT. Okay. I haven't actually started paying for any of them yet. Yeah. Although, based on this article, it sounds like I'm going to not have a choice soon.
Well, yeah, it depends. Yeah, exactly. Depends on what you're choosing for products going forward. So, right. What the article states is that specifically in Australia for right now, and be clear, this isn't in the U.S. What Microsoft has done in the Australian market is they've included their current AI assistant, which is called Copilot, in the Microsoft 365 suite of products. Microsoft 365, for folks who don't know, but probably almost everybody who's listening knows, is a subscription-based version of Word, Excel, PowerPoint, Outlook, that sort of stuff. Whereas you used to buy a software version of this and pay for updates to the licenses and stuff like that. Now all this is recurring subscription revenue, and lots of companies run on these rails. We use Microsoft from a software standpoint for Word and Excel, but we don't use Microsoft Teams. We use Zoom, if you will, even though Microsoft tries to give us Teams, quote unquote, for free. And what's happening now in Australia is Microsoft has folded Copilot into the standard Microsoft 365 package, but they've raised the price. So the package used to be 11 Australian dollars per user for a small business. And the Australian dollar, for folks that want perspective on this, is about 65 US cents. So call it almost 2 to 1. So they went from 11 Australian dollars to $16 per month per user on a small business basis, which is a pretty significant increase. And there's no option for them to reduce, for an individual user to pull Copilot out and reduce the pricing. It's included now, and their total price went up. The other thing that the article notes, which I think is interesting, and I think that could give maybe more headaches for companies, is that on a larger scale, enterprise customers, Microsoft is pushing the product at a price of about $30 per user at an enterprise level. So if you have 1,000 employees, you're spending $30,000 a month for this product. These are a couple of ways that we're seeing these models get folded in, and I'm curious what your opinion is on that.
I think we're going to see a lot more of it, whether we like it or not. And I think, look, for any SaaS business out there right now, particularly any SaaS business that's on that venture treadmill, there's a lot of pressure to not only keep growing your customer counts, but also to increase your ACV as much as possible. And it's probably not popular to say publicly, but one of the easiest ways to kind of maybe increase on the next contract renewal is just to throw in a couple more features and jack the price up.
Yeah.
I've seen at least one of my competitors do that here recently. And really what a lot of these companies are going to be doing is just they're I say just carefully here, but really what they're doing is they're packaging in their own agent or LLM into the upgrade, and then using that to justify the increase. So we're all going to see it, and that's kind of why I think you caught on to it when I said it earlier when you were setting this up. Is like, I don't currently pay for ChatGPT or anything like that, but it seems like given what we're talking about here, pretty soon I'm not going to have a choice. It's just going to be bundled in. And the tricky part's going to be figuring out which one do I actually use. It's still early. Do you use any of them at all?
I don't yet. I want one comment, and then I'll go to my thoughts on the subscriptions. I did say $30 a month for enterprise customers. I meant $30 a year, even though the article doesn't specify. I can't imagine they're charging $30 a month based on enterprise pricing for Microsoft. So this is, call it roughly $3 a month at an enterprise level to have Copilot thrown in, which per user is a pretty significant increase. Anyway, I think the reason why I haven't used one of these agents yet or paid for one of these agents yet is I haven't come up with enough use cases for it. I'm not a big user of things like Siri, so talking to an agent isn't high on my list yet. And maybe this is the troglodyte in me, but like typing into a chat agent isn't all that different to me than typing into a Google search bar. And I would say I'm probably biased here, but a handful of results that I've seen in the travel world, where as you know now, if you're using Google as your primary search engine and you search, they'll summarize the results at top, with their AI. I don't know if they're calling it Gemini still, but in that format. But essentially, the consumer facing product is called Gemini. I've seen some inaccuracies based on scraping of old stories about things like airline loyalty programs and stuff like that, because they're just pulling an old resource. They're not pulling a 2024 story. They're pulling a 2021 or 2022 because the algorithm isn't surfacing the right things. So I don't know that there's a high enough level of accuracy for me not to want to see the source. And so typically what I would do in that situation is I would Google, United Airlines status requirements, and I know who I trust. And so I don't necessarily need Google to tell me that. Now, if I was Googling, what are the symptoms for, a specific sort of disease, I might be more willing to take an AI chatbot's opinion on that. Though I still think I'd look for like Mayo Clinic or, something like that. And it's like, because we want results that are to some degree badged or codified. And as a brief funny aside, I'm sure you'll appreciate this. I've had this eye twitching issue for a while, like the last couple of months. And I Googled and I looked at Mayo Clinic results and Cleveland Clinic results because, those are sites that I trust. And I went 4 for 4, 5 for 5. It was like stress, sleep deprivation, fatigue, caffeine usage, and nutrition. And I'm like, yeah, I got all those.
Yeah.
But I do think there's this badging that I still associate with my results. I don't trust Gemini yet. I don't trust ChatGPT yet. I trust the Mayo Clinic to tell me what the symptoms are for something. I trust certain authors to tell me things about airline loyalty programs. I'm not there yet on the bot to do it for me.
Right. I'm still trying to just figure this out, right? But it's interesting. The best way I could articulate it right now for me is that I feel like the biggest barrier for me personally is fighting the muscle memory that I've developed over the last 10 or 12 years. When I have a question in my mind, I just think, okay, I use Chrome, for example, right? So in my mind, it's like, I just know intuitively to go to the address bar, and muscle memory tells me, okay, just put in like these 3 words in that order, and that's how I'm going to get probably the best likelihood of response from Google.
Sure.
And one of the things I've been testing lately is just I installed the ChatGPT plugin for Chrome, or extension for Chrome, just to see what would happen. And what it does is it overrides that. So when you type in that bar, instead of sending it to Google, it actually sends it to ChatGPT.
Mm.
And what's interesting is like there's 2 things that I think that are still different to me. The first is that ChatGPT is still kind of hit or miss on being able to answer questions that are phrased like Google advanced search queries. They'll probably get better at it, right? But like in my mind, if I'm like, I'll give you an example. If I'm going to buy something like as a consumer, I might type in Reddit space product space review.
Okay.
Because I'm just looking for what are people saying on Reddit, Right. And then I'll usually skim that. But now when I've activated the ChatGPT plugin, it starts typing. So number one, it instead of like Google just showing you all the results, it starts typing, which is cute the first time you see it. Absolutely infuriating when you just want a quick answer because it's just sitting there doing this and you're like, oh my God, here we go. So, and then secondly, it's trying its best to summarize everything that it read through on Reddit when I don't know that I trust that yet. I just give me the 10 links that I should go like skim real fast. So maybe I'm just like complaining or whatever, but the point is though, is that I think even with iPhone, I have not used the ChatGPT integration. I don't use Siri that much. I don't use any of that stuff. So maybe you and I are just like boomer Luddites. I don't know whatever the kids call us these days. And we're just going to be behind the times and irrelevant. in 2025. Maybe that's the truth here, Ed. You and I are going to be irrelevant in 2025.
I mean, that wouldn't surprise me. To your point, I do want to dig into using, the ChatGPT engine on my iPhone, but only in a, controlled world where I can do it, on my phone and keep my data private. So that's probably the next thing I would jump to. But I mean, I've had the new iPhone for a couple months now and have not spent the time to delve into this world. So it's coming, and I'm sure it'll be helpful. I just feel like, it's still there. It's still a little bit too much user prompting to get to where I needed to get. Where, to your point, like, I'm trained well enough as a Googler that I can get the results I need pretty quickly.
Right. Agreed. Well, it sounds like you probably need to go tell someone to F off.
Just another day in paradise.
I wish I was part of this episode. I think people would love to. We should do a whole episode on the negotiation tactics of Ed Pizza.
Well, I mean, in fairness, that would give us a different rating on the podcast platforms. So we have kept a G rating so far on the podcast platforms, and I think folding in the normal way that I talk when we're not on the podcast would absolutely affect our rating pretty quickly, and it would also cause my hands to gyrate around the screen like the Italian that I am. They say the best way to shut up an Italian is to handcuff them because they can't speak if they don't have their hands. So.
I love it, man.
Maybe we'll summarize that in a future episode. For now, I hope the funk exits the Singh household here shortly.
Man, if I'm still like this next Friday, send help.
I will send help, but I will not be the help if you're this way next Friday, for sure. Yeah, I don't want that crud, man. You keep it all to yourself.
Oh, well, we'll take it for the team.
Well,
all right, man. Well, good luck. Feel bad for the other guy on the other end of the phone. We'll see if he still likes you enough to let you pick him up from the airport on Sunday.
There you go, man. All right, talk to you later.
All right, buddy. See ya.